It's time for the Financial Crisis Talk Center with Ken Gross and David Einstandig from THAV GROSS.
Credit card debt is number one. I view it as financial cancer.
40% of your gross income is going to just pay the debt service. You got no chance of getting out.
I would give up my credit score to get rid of debt.
Here's your host, Ken Gross.
Welcome to this segment of the Financial Crisis Talk Center. Today we're going to talk about tax problems. I've got with me in the studio the brain trust of THAV GROSS. David Einstandig, my co-host.
Good morning, Ken. Always a pleasure to see you. If I had my mic on, it would even help.
Yeah, welcome to the show, David.
Good morning, good afternoon.
I mean, we're just getting started, so it's okay. Jenny Lingl, I'm giving you second intro because I know I'm supposed to introduce ladies first, and I forgot intentionally. Good morning, Jenny. Jenny is our head of our tax department. She is our absolute guru in addressing tax collection defense issues, which what we're going to talk about this morning.
Ken, I just want to point out on the outline here, you spelled my name wrong.
I was watching the basketball game.
Okay.
And working on the outline, and it seems as though I know who you are. I don't proof check the spelling. Usually I send your emails to my daughter Jenny Gross, and vice versa. Fortunately,
yes, that's true.
I've sworn her in for client confidences, so she always emails me back. She says, "I'm not Jenny Lingl." She knows how to spell your name.
That's true.
Brian Small, good morning. I'm glad you're here, focused and awake, and you've read and studied the outline, so I know you'll be in tune with the tax question that we're going to address with Jenny shortly.
Good morning, Ken. Wonderful to be here. Absolutely going to be in tune. In fact, we're going to throw some wrenches at Jenny and see if she can get those clients out of those problems.
Because part of what we do in financial crisis management is we have the tools of financial crisis management, and Brian's adding a new tool to the toolbox known as a wrench.
Absolutely.
There you go.
A monkey wrench.
A monkey wrench. Trevor Cruz is with us as well.
Good morning, Ken.
Good morning, Trevor. Trevor is now head of our Lansing office, which is just opened up. And so if you're out in Lansing, you're going to meet Trevor. He addresses your financial problems, bankruptcy, short sales, debt resolution, all the same issues that we address at THAV GROSS in our Bingham office, as well as the business issues that we do, the normal estate planning, commercial litigation, and all of that, and all that goes with that. Now, I want to get focused in and drill in on a tax problem, because in this segment, I want to talk about tax problems. And in doing that, I also want to welcome our Lansing and Jackson viewers, and I want to talk about a tax problem in the context of a person rather than just laying out the issues. So I'm going to give you a case study. I'm going to give you some facts. It's going to be Jerry's problem, and I'm going to tell you about what Jerry's situation is, and then with Jenny and Brian throwing monkey wrenches at her, we're going to explore how to address that situation. Here are the facts. Jerry's married to Betty. He has 2 children. He was in the restaurant business. He lost the business during the Great Recession. He's got $30,000 of income tax liability for 2008 and 2009. Couldn't pay his taxes when the business faltered. He has a $50,000 payroll tax liability because he did not pay in the withholding tax on his employees during the last year when the business was floundering. A very common problem in the restaurant business when things go awry is the failure to pay payroll taxes.
And Ken, why that exists is because you don't necessarily immediately have the taxing authorities saying, hey, you didn't make your deposit, but if you need to get your produce and your vendors and your product and pay your staff, you have to do that immediately. So it's the mentality of, I'll catch up next week, I'll catch up next week, I'll catch up next month.
And I want people to misunderstand what you're saying. People do it. It's a big mistake to do it because, as we're going to discuss, the liability is non-dischargeable in bankruptcy, and it doesn't go away. So it's a difficult problem to address, but it does happen frequently. And in the restaurant business, because you have to have food. And you usually end up on COD when you're in trouble. So the money goes to food, it goes to net pay for the employees for lights and rent, and all of a sudden the payroll taxes don't get paid. You'd be better off closing the business than not paying your payroll taxes, but that's a different story because people don't like to close the business when it means they're not going to have any income the very next day after they close the business. It's a tough tough situation. All right, last bit of facts on Jerry and Betty. He lost his house in 2009 to foreclosure, so he doesn't own a home. He's currently renting. He has no other assets, no IRA, no 401k, no big jewelry items, nothing else. He's got a car with a lease payment. His current earnings, Jerry's making $40,000 a year, Betty's making $20,000. So they're regrouping. They got $5,000 a month coming in. So now I want to look at what are the key tax issues, because we're addressing in this segment the tax problem. First one, I want to talk about what's the difference between an income tax liability and a payroll tax liability.
An income tax liability is dischargeable in a bankruptcy if it has come due more than 3 years ago, filed at least 2 years ago, and the last assessment was 240 days ago.
All right, hold on to that for 1 second, because that's news to a lot of people. I always, a lot of people think income taxes are never dischargeable.
There's a lot of bankruptcy attorneys out there that think income taxes are not dischargeable.
That's true.
But so the bottom line on that is income taxes are dischargeable if you meet that three-prong rule as long and no fraud.
No fraud, and you can't have a substitute for return filed for you on behalf of the IRS.
And that's called an SFR, correct?
That is true.
All right, well, hold that thought, because I like to play acronyms, and that's coming up shortly. We're going to talk about acronyms. All right, so income taxes could be discharged in bankruptcy if the situation is right. That means you have to meet that three-prong test, and then you have to go over to Brian and meet the requirements in order to be able to file a bankruptcy.
And there's an awful lot of other factors that you have to be watching out for. That 3-year rule is the start. Was there a collection due process hearing requested?
Something that could extend the statute?
Is there a tax court case? Was there an offer in compromise?
Okay, so you
proposed?
need to be careful. All right, what about payroll taxes? Why those are not?
Those are never dischargeable in a bankruptcy.
All right, now, why is that?
Well, I think it
Congresswoman Lingl, would you please explain to me why we're treating those differently than we are treating income taxes?
Yes, I would say it's because the income taxes are your liability. The payroll taxes, it's called the trust fund recovery penalty. It's actually the portion that your employee actually withhold from his own paycheck and gave to you in trust to give to the IRS. And I think that's why they make that distinction there.
So it's like the employee's federal withholding tax and the employee's share of Social Security and Medicare?
Right, and that employee is going to still get his refund if he had the appropriate withholdings, enough to have a refund, and still going to get his Social Security based on that amount.
Yeah, so the distinction is that it's kind of a trust fund liability is you're taking someone else's money and spending it when it's not yours to do so. So the government has taken a different view of it. It's a more serious matter. It's almost close to theft. So therefore, you're not going to get the grace of discharging it in bankruptcy. We're going to take a break. We're going to come back. We're going to stay on concept. We're going to talk about tax acronyms. We'll be back after the break.
Tax problems are major problems. Don't let the IRS levy your wages and seize your assets. There is a solution.
We're THAV Gross. Our firm will solve your problem.
If you're behind on your taxes and owe money to the IRS, call THAV Gross.
We've been solving tax problems for 32 years. We stop wage levies, resolve unfiled returns, and obtain the best possible settlements.
Call THAV Gross today, 888-235-HELP.
You like your job. What you don't like is the way your boss has been treating you. He's making comments about how you look instead of your work, and he's been touching you inappropriately. If you complain, is he allowed to fire you? Absolutely not. Unwelcome sexual comments, advances, and contact are illegal in the workplace. Make him pay. Gold Star Law is here to help you through your employment law problem, whatever it is.
Gold Star Law, protecting employees' rights. Call 1-800-WAGES-10 for a free consultation today.
Is the debt piling up? Struggling to get by?
It's all about preserving future income. Bankruptcy is one option. When it's right, it's the least costly, most effective way to save your home, eliminate a second mortgage, and wipe out credit card debt. But you need to address the problem now.
We help people with bankruptcy. Call the experts.
We're THAV Gross. Our firm will solve your problem.
888-235-HELP. That's 888-235-HELP.
Every family has the family meeting, and we all know what that means. Dad's got dementia. What are we going to do? What's the care plan that the family has in place. Usually they don't, or they struggle with a care plan. When you go home tonight and you talk to your tax person and you talk to your financial person, say, what's the plan that you have in place? And as soon as they don't give you an answer, give me a call, because I can do it for you.
Carrying too much debt? Resolve your debt. Call THAV GROSS.
You don't need to be broke, and you don't need to hit rock bottom. If you have income and you're struggling with debt, dump it. Think about the next 10 or 20 years. If you do what the banks tell you, you'll have nothing to retire with. There is a solution.
Don't waste your future. Call THAV GROSS. We're experts at eliminating credit card debt. 888-235-HELP. That's 888-235-HELP.
Hi, welcome back. Let me give a couple announcements, and then we're going to get back to the tax problems. We're going to talk about the acronyms. First of all, our websites have been adapted to the smartphone, so if you, on your smartphone, you go to thavgross.com or financialcrisistalkcenter.com, you can really navigate through it. It's pretty cool. It's not trying to squeeze the big page into the little tiny smartphone, which I kind of like. We have a financial crisis analyzer. I've talked about it before. It took me basically 3 years to finish it. If you input your information into the program, you get there on the Financial Crisis Talk Center website. It says Analyzer. It's free. You put your financial information in there. It analyzes it and issues you a report of what your available options are to address the problem. Would you qualify for a loan modification? Are you probably more like in potential Chapter 7 or a Chapter 13? Could you do debt resolution to get rid of your credit cards? If you're wondering about those things and you're not at the point where you really want to talk to somebody face to face because people have anxiety, I certainly recognize that. This is a chance to, by yourself, put in your information and get feedback and get a report. It's a good, smart step. All your information is completely private. We don't share it with anyone. We don't license the numbers out. We don't give away your email address to anybody. It stays right with us. So if you're interested, go to financialcrisistalkcenter.com, click on Analyzer, and I encourage you to try that.
Ken, roughly how long does it take to input the information?
15 minutes.
Okay, so it's not the end of the world.
I mean, there's a section on credit cards where you could list all of your cards with all the minimum payments, or you can just estimate the total amount of all your credit card debt and what you're paying monthly if you want to get to the short outcome of the answer. But what it needs to know is it needs to know your income, your gross pay, your net pay, your credit card debt, your mortgage payment, your second mortgage payment, your credit card payments, and your housing expense and your living expenses. How much are you paying for your utility bills? It asks all that data quite in a friendly way with some nice pictures that we developed along the way. But you can watch a baseball game while you're doing it. Baseball's a slow-moving sport. You can, by the time you get 2 innings done, you've got all the data in there, and you haven't even missed a pitch.
But the information are your reoccurring routine bills, so it's not necessarily that difficult to estimate it.
You don't have to go to your DTE bill and do an average cost analysis over the last 24 months. It says, what's your average electric bill? And you just, plug it in. So it's a worthwhile endeavor. It's a first step. This is all about options, opening your eyes to how you can improve things so you preserve your future income for you and your family, rather than letting it go necessarily to pay debts of the past that you could get out from under. Find us on Facebook, Financial, Legal, and Crisis Talk Center. I want to thank our sponsors, Gold Star Law, Samasco Law, Elite REO Services, Alan Stalter, and also coming on board in our Jackson Lansing viewing audience, Trips Auto Shop and Body Shop and Collision Shop. Very nice people. Phil Tripp personally is a great guy. And anyone who's out in that area, if you need a collision shop, that's the go-to place. It's been there for a number of years, and it's the leading shop in both Jackson and Lansing.
Don't hide when you collide.
Hey, I like that. Did you just make that up?
Yep.
That's pretty good. Don't hide when you collide. Okay, back to tax problems. All right, so we're talking about Jerry and Betty. They got $60,000 of income. He's got a payroll tax liability of $50,000, and he's got income tax liability from 2008 and 2009. Before we laid out some concepts, I want to throw some acronyms out there, because if you watch TV listen to radio and you hear all these tax commercials, a lot of times they try and throw things out there and talk about things to that are big deals, and they banter around terms. So I want people to understand the terms. So Jenny, what is a OIC?
An OIC is an offer and compromise. It's where you go, and it's with the Internal Revenue Service, not the Michigan Department of Treasury. It's where you submit the forms, which is basically somewhat like filing a tax return, and ask the IRS to accept less than the full amount you owe.
Oh, so this is the situation where if you owe $100,000 in debt, in some circumstances you can make an offer and compromise and settle it for far less than that.
That's correct. The one thing I want to warn people on is that there's a lot of companies, groups, individuals out there who really capitalize on this and actually take your money to do something that they may not be able to do. You should be able to meet with someone, and if you bring in your income and expenses or go over it over the phone, usually within 10 to 15 minutes I can tell you if you qualify and kind of pinpoint a really good analysis of what that amount's going to be. If you're filing a business offer and compromise, that can be a little bit more complicated, but usually an individual income offer and compromise, if you just have individual income and you're not self-employed, is not that difficult to calculate.
And that's a really big point, because the marketing on these national firms, and firms like Ronnie Deutsch out of California, Tax Masters, they all got put out of business by the Federal Trade Commission, and not Federal Trade Commission, actually the attorneys generals in those states sued them for misrepresentation because they were fleecing people out of money, promising them deals that they couldn't deliver. The rules on an offer and compromise are somewhat clear-cut in the first blush. First of all, if you've got $500,000 sitting in your 401k, you're not going to qualify for an offer and compromise unless you give them the $500,000 first. So they're going to take your 401k, they're going to take your IRA. So if you have retirement money, which is a good thing, offer and compromise is not the solution to your tax problem. There are other solutions.
Don't forget, though, Ken, before we leave that, if the offer and compromise is not an available opportunity, a bankruptcy, whether Chapter 7 or Chapter 13, and even if you're a high-income earner and have extreme debt, a personal Chapter 11 may be an available opportunity to you, and it allows you to keep and maintain all of those assets, 401ks, IRAs, and the government cannot touch them in the bankruptcy process.
And that super big point. And here's when if you caught the last segment that we televised the show when we reintroduced financial crisis management for the 48th time over the last 5 years, we talked about the importance of quarterbacking and options, so that if you just go to a person who handles tax problems, he's like a former IRS agent or something. He's got horns sticking out of his ears. All right. That person doesn't know anything about bankruptcy. So that person's not going to be able to say, maybe a bankruptcy is a better solution. That person's going to try and take your money to solve your tax problem, because that person's first objective is to earn an income. So the big comprehensive point is you want to look beyond one solution to a problem.
That's correct. Right. David and I just had a
coming up to break. I want to throw out another term for you. Just give me what it means. CDP.
Collection Due Process Hearing.
All right, we're going to take a break. We come back. You can make your point to David and tell me what that means. We'll be back after the break.
Tax problems are major problems. Don't let the IRS levy your wages and seize your assets. There is a solution.
We're THAV Gross. Our firm will solve your problem.
If you're behind on your taxes and owe money to the IRS, call THAV Gross.
We've been solving tax problems for 32 years. We stop wage levies, resolve unfiled returns, and obtain the best possible settlements.
Call THAV Gross today, 888-235-HELP.
Are you struggling to pay your mortgage? Afraid of foreclosure and the financial mess it can cause? Time is not on your side. Call Alan Stalter, the short sale specialist. For years, Alan has been helping distressed homeowners navigate through the short sale process. His experience will get you out of your home without the credit score damage that follows foreclosure. If you want a fresh start, you need to call Alan Stalter, the short sale specialist, 248-854-3829, or MetroDetroitShortSale.com.
Going from hourly to salary seemed like a good career move, but now you're working 60 hours a week instead of 40, and you aren't getting paid any of that extra time. You're stuck, right? Wrong. You can be on salary and still be entitled to overtime. If you've been wrongly denied such pay, you may be entitled to that and more. Gold Star Law is here to help you through your employment law problem, whatever it is.
Gold Star Law, protecting employees' rights. Call 1-800-WAGES-10 for a free consultation today.
An important message if you're planning to file for Social Security disability.
The biggest problem I see is people don't go to an attorney until after the claim for disability is denied. You need to get it right the first time.
Before you file for Social Security disability, call THAV GROSS.
We do the homework to make sure the claim is properly presented so that you get the benefits you deserve.
Call THAV GROSS 888-235-HELP. That's 888-235-HELP. Call today.
Welcome back. We're talking tax problems. Jenny Lingl, our head of our tax collection defense department. I got Brian Small, bankruptcy guru. Trevor Cruz, bankruptcy debt resolution guru, handling our Lansing office. David Einstandig, business expert attorney. Jenny, I want to just give me a couple terms here. CDP, you said, is a collection due process hearing. Tell me in 30 seconds or less, what is that?
When you receive a final notice of intent to levy, you do have a right to file for a hearing. You have to do it within 30 days of receiving that notice. And what that does is it takes you out of the general collections if you're just with the ACS automated collection systems.
So what do you use it for?
We use it to get assigned to a person because an appeals officer or settlement officer can consider discretionary provisions in the Internal Revenue Manual that the automated collection systems cannot. The problem with it is if your plan is for a bankruptcy, then you're going to extend that time for which you'll have to wait longer before you can discharge those taxes.
All right, let me narrow that down, because if you file for a CDP hearing, it stops the collection process, gets a live person that you can deal with to negotiate and maybe work on an installment plan or something but it has a collateral effect that it extends that period in which you have to wait before you could file a bankruptcy to discharge the income taxes that Brian was talking about.
Absolutely.
I got it right?
Not only does it extend it, but it's for the period of time you're in the CDP plus an additional statutory time.
How much?
I believe
it's 60 or 90 days.
I believe it's 90 days.
That's kind of like what David Einstag and I do when we draft covenants not to compete in employment contracts. We sometimes put in a provision that says if you violate the covenant, so we always say it extends the covenant for the period that you're violating it, and I always like to say it extends it for a period of 1.5 times for every day you violate it. So, remember that, David?
It's called a tolling provision, yep.
Thank you.
But the bottom line is sometimes the CDP hearing is highly beneficial. We get to talk to a human being and negotiate, and sometimes we would never do a CDP if the statute's just about to run. So it all comes back to what you talked about before, Ken. You quarterback it, and you look at it from two different views. You look at it from the aerial view, and then you get into the nitty-gritty.
Good points. Two more quick terms. I just want to get them out there. CNC.
It's currently not collectible.
Okay, so it's not a new network or anything like CNN, CNC. Currently not collectible. That is a term that you use where you get someone who the government stops collection efforts because their income is sufficiently low enough that the government agrees they can't bother
They
to
agree
collect.
that their allowable expenses exceed their income. The liability remains, but they agree not to collect against you as long as you stay compliant, and they can reevaluate it every couple of years.
Okay, next one. SFR, we talked about it before. What does that mean?
It's a substitute for return. It means you didn't file your return and the IRS filed it for you, and now it's non-dischargeable.
And
Brian, what does that mean?
those are three tragic letters in the world of bankruptcy. SFR, substitute for return, stands for the inability to ever discharge the obligation in a bankruptcy.
So not like a letter. You mean like the letter, SFR.
Yeah.
Okay,
Ken,
next one.
Ken,
SOL.
Ken,
I think
can tell you
everybody
what-
knows that one.
Well, wait a minute.
What about NFW?
Wait, did you
And everybody knows that one.
did you
too.
take algebra in school?
Yes.
Okay, just like you took econ.
Yeah.
So SFR equals SOL.
Yes, it
Okay.
does.
That's what happens.
Now,
it.
but there's an
That's an
important
equation.
there's an important fact here.
And if I say NFW,
It's the same. Here's the bottom line.
I want to
B
move on. We
squared.
got to
No,
we
no,
have
no.
to
This
address
is
what Jerry's
important.
situation
We
is.
have to avoid the SFR. And one of the things that a lot of people have a fear of filing their tax return because they owe money. And I know we're getting to this in a little bit, but the
Well,
bottom
we're not
line.
going to get to it unless you get to it quickly. 'Cause
Okay.
we only got 3
You
minutes.
must
Let's argue
file
about
your
what we're
tax
gonna get
returns. Do not ever avoid filing your tax returns. There's two types of penalties, and there's 3 types of penalties. There's a non-filing penalty, there's a non-payment penalty, and then there's jail. And the non-filing penalty could associate jail with it. The non-payment penalty is just you owe money.
Cut you off because I want to get to solving Jerry's problem, but your point is well taken, and the big issue on that is the non-filing penalty is a waste of money. If you file the return timely, because we're coming up on April 15th, even if you don't have the money, you don't get penalized for not filing. You'll still get penalized for not paying on time, but why take two penalties? There's an old expression, one penalty is better than two. So absolutely, if you're sitting there right now and you haven't done anything about getting your tax returns filed, and April 15th is around the corner, get the return filed even if you don't have the money. It's a waste of money to incur that other penalty. Now, you guys, we got 2 minutes. What should Jerry do? Bankruptcy, if I understand what you're talking about here, would discharge $30,000 of his debt,
correct,
but not the other $50,000. What about an offer and compromise? What's the solution for Jerry?
I think the offer and compromise in this situation is the best bet, because an offer and compromise can cover both income taxes and civil penalties, or the trust fund recovery penalty.
Here's the lesson, though, Ken.
Because right now on bankruptcy, all he would, let's say Jerry had another $100,000 of credit card debt. Let's say he had a guarantee to the bank on the restaurant for $500,000, and that's still lingering over.
You probably would put Jerry into a bankruptcy first, and then you could deal with an offer and compromise to deal with the other remaining $50,000 worth of non-dischargeable.
But you have to keep in mind Brian's point. If you don't file your returns, these options become limited, and a lot of them no longer viable.
Good points. I forgot to mention events we've got coming up. We have a seminar coming up on Wednesday, May 7th in Lansing at the Downtown Public Library, and Wednesday, April 30th, 7 to 8:30 at Bingham Farms. The name of the seminar is Strategic Debt Elimination. If you want to sign up for it, seminars are well attended, lots of information. Of course, they're free. You get a free copy of my book, Dump Your Debt. Go to our websites, financialcrisistalkcenter.com or thavgross.com. You can sign up for them there, or you can do it the old-fashioned way. You can always call our number, 888-235-HELP. Seminars are well attended. You get a lot of information, and the focus is what we've been talking about on the show, options. So you know the range of things that are available to address problems rather than just thinking that there's only one solution. This example right here, let's say he had a lot of debt, you could maybe file a bankruptcy and do an offer and compromise, get rid of both problems. In Jerry's case, we can probably knock them off both with one action. Thanks for listening to this segment of the Financial Crisis Tax Center.